Yes,
Yeah.
he wouldn't tell me who was going to be on here. I told him he was trying to like start some kind of blind date or something,
Yeah, you
Yeah.
never know.
Listen, I can't treat you any different, Tricia. Everybody wants to know who's going to be there. What are we going to talk? Everybody wants to know. If I can't tell them, I'm not going to tell you. I mean, you're special, right? But I'm trying to not show any partiality in that aspect, right?
Are you in a
Tricia?
bunker, Tom?
What's that?
Are you in a bunker?
Don't disclose your secrets, Tom. You don't have to answer him.
This is where the magic happens.
All right, Tricia, did you have any more housekeeping questions? Are there any more fears we need to relieve here?
No, I'm just always afraid I'm going to say something stupid, so you can edit this out, right?
Of course.
He
Of
likes
course.
to add that at the front.
Hello and welcome to the Durham Talents channel. My name is Jesse Durham. We're back for another council of our round table. We have return guests. We have first timer as well, which I'm really excited about. We're going to be talking about personal finance, infinite banking, who knows what else. And I hope that you enjoy. All right, and I say who knows what else, right, guys? Because we were literally just chatting about news and parenting and marriage and money and, hey, I'm speaking at this event and all kinds of cool stuff. How are you this morning? Let me do this. Let me start ladies first. And because it's her first time on here, Miss Tricia, how are you this morning?
I'm doing great this morning. Thanks so much for having me, Jesse.
Absolutely. Absolutely. I'm really excited about having Tricia on here because it is her first time, although we know each other. And we've also got, if you're just tuning in and you're seeing Tricia for the first time, you need to also put it in your agenda to watch our interview that we have on the channel as well. So you can get Tricia's backstory. Check that out. We actually haven't done it yet, but that's just how we're rolling. You know, we got so many projects going on, and y'all know, y'all are busy people. Glad to hear from you, Tricia. Tom, what's exciting in your world, sir?
Oh, so much. And I just want to dispel any confusion. I am not sitting in a bunker. I am actually in an office setting around people, right? So everything's good. I'm happy today, and I'm happy to be here.
Well, you look secure anyway. I love it. I love it. Brandon, what's new, man?
Man, I'm just excited to be on here with you guys as well. I guess when you look at just the opportunity to sit and talk about protecting our families financially and you know, building a legacy years into the future, and just you know, the lack of maybe worry or lowering the amount of stress in your life that is offered by the infinite banking concept. So I'm excited to sit and have this roundtable with you guys and see where this conversation goes. It's always fun, and Jesse likes to always throw curveballs. So we'll see what happens.
I'm excited. I'm definitely, yeah, put your seatbelt on, Tom. Yeah, absolutely. So thanks again for y'all taking time out. You know, Brandon was just talking about this speaking event that he has, real estate group coming up. So y'all are busy people, but when we get together, you've already given me, you know, a couple of things that I think I'd like for us to talk about because it's on people's mind. One thing, Brandon, I'll start with what you just inspired in me, and it'll be tied into something that Tom mentioned earlier. So I'm ready to talk about recession. Okay, that's a big word that people are throwing around now, and it's not a new, you know, thing for it to pop up, flare up, right? In the news or people's conversations, a bigger picture. But I like talking at the me and you level too. Like there are some real things that people could choose to implement that we could be discussing and helping them dial in to where, you know, come what may, they're going to be at an advantage, period. Because there is so much out of our control, but there's so much that's in our control. And then because it's at that me and you level, Brandon, so I'll tell you where I'm at right now. We've been implementing infinite banking for going on 10 years. Also, I'm coming up on my 40th birthday. Also, just keeping a gauge on where my family is at and where we're at with infinite banking. It's really on my mind to ratchet up what we're doing, meaning how many policies we have, how we're using our system, how we could improve that, conversations I'm having with my children. So So one topic that's coming to mind in a big way, I guess, more so for me here recently, is that protection that you just mentioned, and protection in a multifaceted way. Meaning, worst case scenario in my life today is probably the end of my life. Meaning for my family in that context, and regardless of what else is all going on in our world, my family's world, I know that I've got a guaranteed setup for them. It's so easy to overlook, I guess. Like, here's something I'll tell you. I recently recorded a video where I addressed the myth, mystery, and the misconception around just buy 10 to 12 times your income in term insurance and you're fine, right? So y'all can weigh in on that. I recorded some thoughts and some views on that. And that's where a lot of people are, right? Like, they got work protection. They've maybe gone out and personally got something. If they listen to a saying like, well, just 10 to 12 times my income, okay, I'll do that. And maybe they do that. And I commend them on that, right? Like, that's a proactive step. Awesome. I feel like everybody should have adequate protection. So I'm just trying to give y'all, a good tapestry background on what I'm thinking of and where I'm at, and then I'm handing this over to y'all. Y'all could talk about any of this. Guaranteed protection. And again, when it comes to protection, I'm not just talking about the death benefit that we've built for ourselves, which is awesome to see grow year over year over year, because where we started at 10 years ago, like I said, to where we're at now, makes me realize, man, we've done a lot. We've grown that big number a lot, but also I want to bite off and chew some more, right? Because we're actually at the point to where I think with our next policy that I will have maxed out my human life value currently. The next policy that I'm getting ready to get on myself, but that then also means that our children will be eligible for more coverage because I have more coverage. So that's a little nugget right there that I'm putting in y'all's lap as well. So that's some of what I've got going on. Tricia, your first time here. I'd love to get some feedback from you on any of those subjects. We can talk about recession. We can talk about protection. We could talk about 10 to 12 times your income, any of that. You pick where you want to dive in on.
Yes, you've laid out so many different things. I'd love to talk about the recession piece, but also just what you were talking about. I too am maxing out my human life value. We were talking about term insurance. I think that is a great place for people to start, but it's only the start, right? Because that expires, right? It comes to an end, and then you have nothing to show for all of the money that you put into that if you don't pass away during that term. So one of the things that I have been trying to encourage people to do when I'm speaking to my clients, but I'm also doing it myself when I say I'm maxing out my human life values, and you may not be ready to pay so much more premium in whole life, but when you set yourself up with a convertible term, you're guaranteeing that insurability for the future, and then you can convert that term into whole life when you're ready to pay those premium dollars, right? Or you have more income coming in, or whatever the case may be. But that way you have guaranteed yourself the right to that protection, and you're not going to lose that because something changes in your medical history or whatever, because you have locked in that insurability as well as the current death benefit, right? So should something happen to you. So it does both of those things, because oftentimes when we set someone up with, what we are looking at as a dividend paying whole life policy that's set up for infinite banking, then it is usually a lesser death benefit than what they should actually have. So we want to supplement that with some convertible terms. So I'm doing that so that I will be able to continue to pay more premium into the future, because premium is the solution, right? So many people don't understand that piece. Hopefully some of your audience has begun to really grasp that. But and then I guess just bringing that back to this idea of recession, when you know that premium is the solution, and you've got this whole life policy set up for yourself, and you can look down the years on the illustration and know, if I pay this premium, I have guarantees for my future down here. And it's just going to continue to grow day by day, increasing no matter what's going on in the economy. And that is just hugely just a stress-free way of life, as Nelson would say, right? And so it kind of breaks my heart for the average American who hasn't understood this or has been maybe sold a different idea of what whole life can do for you. And now they're, watching their 401ks or their stock market, the volatility, and it's creating fear. And man, it's just makes me all the more want to get out there and be like, there is another way. There is another way so that you are in control. That's the thing. We all feel so out of control in the traditional system, right? We don't have control of what's going on in the markets or what executive decrees coming down that's making everyone panic and fear and, and causing those markets to go crazy. And we have no recourse at the you and me level. But when we have this in place, we have a much greater measure of control and guarantees to look forward to. So I love that.
Absolutely. Absolutely. So let me ask y'all at that high level, just to make sure it's not just me looking and seeing it this way. Do y'all think that most people are insured? Number one. And then the follow-up to that is, do you think that most people are insured enough? Whatever enough means, but I'm just asking at a high level, are enough people insured? Are they insured well?
I think it's no to both of those answers, right?
I think so.
Yeah, I would agree. Listen, I think there's to your point, Tricia, a system that's designed to focus on the insurance component, and there's no getting around it. It's insurance, right? So obviously that comes with its own sort of philosophy. Let's try to minimize the costs associated with it, right? That's the mantra. And the opposite side of what we talk about is a certain event in our lives, our death, right? That's certainty, and that's what's causing a lot of pain and anxiety today, the lack of certainty of what the future holds, right? That's what causes people to sort of start doing things irrationally. Like you watch the market for a day, you'll drive your mind insane, right? Easy. It doesn't make any sense, right? When you look at it that way, right? These companies are valued a certain way, and it can flip-flop so drastically in a day. It tells you something is off, right, in our markets. But when I think about it, when I talk to people and they can't make the bridge from thinking about it only as insurance versus an asset for themselves, for their families, for potentially multiple generations. It's a bridge a lot of people are not able to cross yet and adapt. And so it is really something that, through the course of our education and even exploratory sort of worlds, like you got to get educated yourself and understand it. And that's what some people are not willing to do. And that's part of our jobs to do that. But there are people that just won't take the effort to even explore those other areas. And, they're going to play in that safe system approach, right? It's the safe mode, right? It's what people know. It's what's been talked about. And, that's human nature, right? It's just the brave are willing to go explore. And some people won't.
Sadly,
I
it's
love that.
safe, But
yeah, and it's ironic and that's exactly it. It's the ironic thing. When you go exploring, you start realizing the truth. And the truth is that this is as safe as you're going to get, right? And when people are selling off bonds like crazy, right, just so they can go into the market and take on more risk, right? What do our policies do? They don't move. They go higher, right?
Get stronger. Yeah.
They get stronger, right? There's no and people are looking for that certainty somewhere, and they can't find it.
Yeah. Yeah, there's a couple of things that you guys mentioned that made me think. I mean, it was, as a young age, I was really interested in how can I, build capital, and was taught about, put some money into the stock market, just put it into the S&P or put it into a few different things. and this and that. And then so I followed that. And then, like in the late 90s, I saw a crash right in my portfolio. And I was like, that stinks. And then again in like 2008, and I saw a crash, there during that time. And I'm just like, yeah, I don't really have any control over this, right? The news comes and this thing takes a dive or this thing goes up, right? And, the whole thing about average returns, right? If I had 100K in the market and it lost 50% and I go down to 50K and then it goes up by 50%, guess what? I didn't get back to 100, right? I'm only at 75,000, right? So this average return in the market, when you have to make up ground after losing so much money, there's an illusion that we're sold about it, like well, your average return over a long period of time is this. Well, when you do the math one way, it looks great, but when you look at reality, it doesn't look so great, right? And so, a lot of the other things that you guys talked about, is what's happening too when we buy stock, something that we don't think about. A lot of times when we buy stock, we think, oh, I'm investing in that company, right? And that company's benefiting from my purchase of that stock. But you're actually just bought that stock from some other person in the market that decided to sell it, right? And so there's a disconnect, right? And so you got these people with large pools of money that are putting money into a stock or a company and driving the price up. And then because they have large pools of money, then they pull money out and then the price goes down, right? And so I realized during those two dips in my personal portfolio, I was like, I'm in no control of this whatsoever. And it's very harmful to me and my family if I just continue to ride the roller coaster, right? So anyway, those are a couple of thoughts that came to my mind as you guys were talking that I thought I would share.
So I want to talk about that roller coaster because my social media is just full of, people's advice, people's suggestions. And I love it. I love it that people are willing to put their thoughts, and perspectives out there. It's interesting. I don't believe all of them. I'm not going to personally adopt all of them, but it's neat. All right. And I love facilitating a conversation. So I want to talk more about that. Let me put one more pin in the protection aspect of our conversation so far. And let me ask it to y'all on a question that just occurred to me with how Tom was describing his feedback a second ago. What I'd like to do is poke a hole in what I think is a stigma or what's that word? Taboo around leaving a lot of death benefit or leaving death benefit at all, leaving a windfall for the next generation. Here's how I'd like to try and do it. I love that you inspired me, Tom. So me personally, Jesse Durham, I can't have enough money coming from these insurance companies to my family. Me, I wish it were bigger. And I'm out here trying to actively do something about it. That's what I'm doing, right? I can't leave enough for them, personally. If you, Brandon, Tom, Tricia, if you or anybody you know could leave a lifetime supply of gasoline for their vehicle, like if your kids never had to go to a gas station to get gas, would you do that? Would that be a good thing, a worthwhile thing, a noble thing?
Sure. That's a gift.
Absolutely. It's a valuable resource as far as I'm aware.
I think so. Unless they're going to ride a motorcycle down the highway at 200 miles an hour and kill themselves. And yeah, hopefully they're responsible adults, right?
So the education, yeah, it's a good point because the education should always be there, right? The education should, so when I said, the insurance company, can't send enough checks to my family, that's because I'm out here intentionally trying to give them an education on stewardship and productivity and loving each other and helping people and, pursuing their gifts, all right? Where that tool, that gasoline, is just going to be more fuel for their fire, all right? See what I did there? Fuel for, okay. The dad jokes are strong here. Yes. But you see what I'm saying about maybe the stigma or the taboo behind money. Money's just a means of exchange. All right, same question. And I'm not, I really want y'all, excuse me, to think about this. And maybe this is simple. Maybe you're going to say, Jesse, that's so silly. I don't know. You can tell me. But if we could leave a lifetime supply for our family of gasoline, we would. How about groceries? Whatever grocery store you go to, if you could leave your family, like if you knew that your grandkids were going to have an unlimited access to the grocery store for their needs in life, is that a worthwhile thing? Is there anything wrong about that? Again, with the education, Brandon, you don't get something for nothing. Somebody had to do something that led to this, right? But in and of itself, what's your thought on what's going through my mind here? Love to hear it.
What strikes me too is the who says it? Maybe it's Buffett. I don't remember. Leave them enough that they can do anything, but not do nothing. Right? Give them enough, right? That gives them enough fuel and resources to, explore their own potential and contribute, massively to the world, but don't give them so much they can just sit on their asses forever, right? And just be complacent and not fight for anything.
I think that's the stigma, right? We don't want to create these trust fund babies that just blow their money and have no stewardship at all with that. In fact, if you win the lottery, we've all heard the stories, it can ruin people's lives.
So I think what Tom said is true. Tricia, I think what you said is true. But if I could give some pushback right there, my personal perspective at this moment is that there are plenty of people out there that would run with that for the wrong purpose, to say, well, I'm not going to go establish anything.
Correct.
So I feel like both those things are true at the same time. That, yeah, I've heard that saying, Tom, give them enough, but not so much that they don't have to, pursue or even feel the desire to pursue their own journey. But then also, I feel like, the majority could use that as, yeah, I don't want to spoil them, so I'm not going to do anything. I'm not going to do anything. I don't like it.
Isn't that just like anything, though? You can fall into either side of the ditch, right? Let's walk down the middle of the road a little bit more. I don't know, because no, none of us wants to do that to our family, where they are able to be lazy and unproductive human beings because they don't need to do anything. And at the same time, the scriptures also says a good man leaves an inheritance for his grandchildren, or his children's children. And so, yes, I think it is just so incredibly important that that actually feeds a little bit of our own selfishness too, when we think about not leaving anything, because we all see the bumper stickers. Oh, I'm out busy spending my children's inheritance, because it's all about me and right now and nothing for the future. So I think either one of those attitudes is lousy, right? But I want to bring the education along with it. My children, I want them, first and foremost, I think what my hopes and dreams for my children and my grandchildren and my great-grandchildren with this whole legacy piece is to be able to encourage them to be and do what God has made them to be and do, and not to be hindered by the things that I see right now, right? You've got two spouses both having to work just to make a living, to survive, to pay their mortgage, and they're not able to be home with their children. You know what I mean? At least one of the spouses home with the children and actually being able to, I don't know, it just feels like we've lost a certain amount of our humanity. We've become cogs in a wheel just trying to survive and keep up. And I just don't want that for my family. I want them to be able to be generous, to be able to help people flourish, to be able to do good things in the world because they have the means to do that, to lift up their neighbors as well as their own family, right? So maybe that's really idealistic, but that's my goal.
I'm here for it. I love it. Amen. You have my applause. I'm so happy you're here. What are you guys thinking otherwise? And if you need me to, I'll go back to that one question or reference of people are saying, I've seen this. Y'all can tell me what you're seeing. I'm seeing people say, Don't freak out. If you've got money in your 401k or money in the market, etc., ride the roller coaster. You only get hurt if you jump off. The market always bounces back. Remember your averages that Brandon was talking about. All those types of things. Anything on that aspect?
It makes me laugh a lot because, it's back to when you hear that kind of advice, and it, on the surface sounds logical, right? If you look at long stretches of time, and you could prove cases it goes up and down and such. But, when I look at it broadly, I think and I hate to be thinking nefariously about things, but there's a reason that people want to keep the money in the system, right? And there are things that are being said, buy term invested, whatever. You can name all these sayings that get sticky, and they create a belief system that we don't even question anymore in a lot of cases, right? We're being brainwashed in a lot of ways, unfortunately. And we have to almost unbrainwash ourselves in a good way in some respects, right? You got to that's what the feeding of information and different perspectives help you to do. But in this scenario, it's to appease that sort of system. Don't take money out of there, right? We got to keep it in the system, right? We got to keep the system working. It's funny because it's like, if it goes down, don't take it out. If it goes up, don't take it out. It's like, when do you ever take it out? Never, because you want to keep it in the system perpetually, right? That makes money for this whole system. And it's like, you're never gonna be able to use your wealth. Like, that's what it's for. And that's what I find ironic by the whole system, is it's meant to keep the money in the system versus for ourselves to use, to enjoy, to give, all those things that really the reason we want money to begin with, right? Versus in the system. So I know that takes it to a very different level, because what I look at from a control and freedom is that I get to choose to use my money whenever I want to, right? And for what I want to use it for. And unfortunately, what the system design is almost takes that away and puts it in someone else's hands, whether it's the government, whether it's the market, whatever, banking institutions, like, we're beholden to things, right? We give that power away. And I think it's intentional, right? And so this is a way to start saying, what are ways you can extract and control back for yourselves, for your families, and not for this lifetime, but for multiple lifetimes and generations. That's what I kind of look at.
We'll leave it to the guy in the bunker to give us the nefarious perspective, as he put it. No, it seems... So I think that's a valid point. There's a big difference between micro and macro in my mind, right? If you say the market always bounces back, you're talking up here. What I care about is, what do my prospects look like for passive income time of life, retirement age time? Like, I don't care what the market's doing. What I care about is how it affects me. So I'm not giving investment advice. Nobody here is giving investment advice. But you understand what I'm saying? Like, it's easy to tout that kind of language when you're not the generation who's getting ready to step in on that age of life. And everybody that says that kind of stuff now needs to remember, there is this thing called a boom bust cycle. And what if you're that generation, the next time it goes boom and bust, right? And then you're living that out. It's easy to say, I hate it for you guys right now, but everybody else should stay in the market because the market always comes back, blah, 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 blah. So, Tricia, you look like you felt strongly about that. What do you want to say about that?
That's what I was going to say, is that advice that we hear. Like, I've seen it even just on my social media recently, people will say that. I'll name any names, some of our financial gurus out there putting that out there, just hang on, it'll come back, all that kind of stuff. And there's people commenting, but what about me? I'm retiring in 2 years. Like, do you have time to wait for it to bounce back? And just because the market bounces back, does that mean that every, item in my particular portfolio of mutual funds is bouncing back? And how much bounce back does that take? Like, to Brandon's point, right? Just because it bounces back to where it was doesn't mean your numbers, because you don't do the math, are going to be back to where they were. It's going to take a super bounce back just to break even, just to be at, the same at zero, not even a positive. And so I think the sad part is that we do not, as a general population, have a good understanding of our monetary system and how it works and how we are on a debt. Your dollars are really a representation of debt. And we're just on this constant cycle, boom and bust cycle because of that. And it's like keeping everybody, like you were talking about, not to be part of the nefariousness, but we're on a treadmill running as fast as we can, full steam ahead, and it has to continually grow the debt. So we're always talking about getting rid of the debt, but we're actually in a system that requires the debt to continue growing. And at some point, it's inevitable, I believe, that the whole system will collapse. And so when is that? Yeah, which collapse do you want to be a part of is essentially what it feels like, is the option, right?
Well, let's not stop at the collapse then. So if that were the case, what is someone to do to best prepare for such an event?
There's a couple of things that you guys have mentioned. Obviously, it leads to what do you do, right? And one thing, as far as what do you do, maybe like you mentioned a guy that's a couple of years from retirement and their portfolio gets wiped out, right? Like they're supposed to be moving into more conservative assets within their portfolio, right? Bonds, T-bills, and very low risk type assets, right? But are they? Right? A lot of times people aren't. And I think they think, well, it's just going to keep going up. It's just going to keep going up. And so we're afraid we're afraid to miss out, but there's also a greed aspect, right? Where we're like, oh, but we've just had 10, 15 years of really great growth. It's never going to end, this fun little ride that we're on, right? Well, there are boom bust cycles and it does end, and it was manipulated to get us to where we've gotten over the past period of time, right? But the other thing is, why are so many of us invested into the market in the first place? It's because we were told to go get a job and put your money into a retirement plan, and that retirement plan is invested in the stock market for the most part, right? Or mutual funds that are invested in the stock market, right? Would we have chosen that otherwise? And do we think about it on a regular basis? No, this is something that I don't have to worry about because I'm not going to touch it for years down the road when I retire, right? Then the Nelson would say, do you feel like something's awry? Like they've created this high taxation, and then they created the solution to this problem of high taxation, a 401k and an IRA that put handcuffs on your money that you can't touch, and there's all these rules around it, right? Oh, and then when you start to retire and you start to pull that money out, like if you pull too much out, we're going to tax you on it, or it's going to affect your Social Security. Like there's all these like rules and manipulation, right? And then you
when you get to a certain age, you better pull out more.
Right.
Yeah.
Yeah. So anyway, the infinite banking concepts, the biggest thing that bubbled to the surface when we talked about one word that described it a couple years ago at Think Tank was control. The second word was freedom, right? And my perspective is my money in an IRA or a 401k doesn't give me control, and it doesn't give me freedom, So anyway, we could talk about that for a long time. I would say one more thing though. Europe had a stock market crash in the past decade or so, and they're saying now my money is back to where it was before it crashed. But guess what? They haven't even taken into account the inflation that's occurred over that period of time. So is it really back to where it was? It's not. It's not. In fact, if you ask ChatGPT, what is $100 worth, or what does it take to purchase what $100 would purchase in 2000 today in 2025? And she would tell you, or he, ChatGPT would say, $126. I'm like $126, right? So that's a 25% loss of value. I think it's actually closer to 40 or 44% when you look at it compared to the price of gold, you know? Um, so anyway, those are some things that we just kind of get caught up in the noise, and we don't think on us from a sound money perspective, what's really happening in the background. And then my last thought is bonds and T-bills, those risk-free places are exactly where we're putting our basis. And we've got experts that have been doing this and managing this for over 100 years, you know, and paid dividends through the Great Depression and the recession and everything else for that period of time. And they're managing that money in risk-free, safe places like bonds and T-bills, and corporate and government bonds and T-bills. So anyways, those are kind of my thoughts. I don't know if I hit on the head exactly what your question was there, Jesse, or maybe it was more, but those were some of the thoughts I was having as you guys were talking.
So I would say yes. My answer is yes. The one thing I would add to your several points is the time itself. So when people are talking about going down, getting back, the time is always extricated from that. Can't get the time back. Even if you could get the money back, meaning the principal, then you got to talk about, you know, the inflation like you pointed out. Can't get the time back though. And it's so y'all know this. Y'all know this. How long ago was it that, you know, your kids were younger or grandkids were, and time is fleeting. So can't get the time back. That's the only other thing that occurred to me to add. But you mentioned control, Brandon. I like how Tom said it earlier. Tom said something along the lines of extracting control back, I believe were your words. You used the word extract. And I think that is a good way to put it, because we are pointed this direction, propagandized in this direction. And again, I'm not telling people do the market, don't do the market, have these investments, don't have these investments. You do what you want to do. What I would say is just be aware of this. That's what I'm trying to facilitate right here is I'm getting y'all's feedback and y'all's thoughts and y'all's perspectives. And, you know, we're just honing things in and dialing things in our own personal lives. And we're helping people do these two things. Again, Brandon and Tom, you talked about, Brandon, some of the advantages of putting capital in a particular place, which is these whole life policies that Nelson describes in his book, like we've been talking about, because these mutual life insurance companies have been doing what they've been doing for over 100 years, right? So that's just the entity, which has several reasons why I believe that it's the ideal place to put that capital, right? Because it is so well managed, and it does have these guarantees, these contractual, legal binding guarantees of access to capital, that protection that we started talking about in the beginning, Tricia. So many different aspects. But then when you talk about that extraction of control back to yourself and you reacquire that, like Tom was saying, and then not only do I have the advantages of I've built capital here, where I have these several advantages because I did that, but I also have access to capital. That way, if there is some pop here or some opportunity, that's the other side of the coin, right? It's like if you got a bust, okay, and you have traditional assets or whatever, but you have access to capital in this private banking system that helps you weather that storm. And it can be a big storm, a little storm. Like the storm could be my department got laid off. You know, I got laid off from my job. Whatever. Like that's a micro, right? Bust in your personal life. But it could be, oh no, my whole industry was disrupted by this worldwide, you know, event, etc. So you just go big or small, however you want. But because you have that access to capital, you can weather storms, you can optimize on opportunities. You just have so much.
So Jesse, just something to add, just to your point, this is not investment advice. I'm not giving that because, you know, there's a lot of ways to invest. However, when I think about it from two things that hit on, you said you're getting close to your human life value in terms of what you have in terms of insurance. And, you know, it ties into this concept of retirement too, is like, I'm supposed to just work for a while and then shut it down and do nothing and enjoy life, right? To me, as I've grown and sort of my belief system is a little different now, is My job is to become as valuable as possible for the rest of my life.
Mhm.
So my human life value should be growing to the day I die. And what does that mean? That means I'm contributing still, I'm still learning, I'm still growing. And to me, that's where I get back to the control. I can control that piece, right? I can't control what the markets do. I can't control even my real estate, whatever, all the tenants, they're not great either all the time either, right? There's things I can't control. But what I can control is that I'm still contributing, growing, adding value, and and then that should sustain me from an investment perspective. I'm investing in myself, right? I look at that much more deeply these days because that I can control, right? So I'd rather have it here in my home base than out there, someone managing it in some way that I have absolutely no touch to it, right? So I urge people to think that way because, I think you're think about who would you rather invest in? Some mutual fund manager or yourself to add value to the world? I'd bet on myself every day and Sunday. Twice, was it twice on Sunday?
Twice on Sunday. I love that perspective. Me and my mom were just talking about a Bible character this past week. Caleb is his name in the Old Testament. And there's one point where he's 85 years old. And he says something along the lines of, I have the strength to go out and to come back in. I love that mentality of, 85, still crushing it, still expanding, still growing, still leveling up. I love that. I love that perspective. Anything else on this subject, y'all, of recessions or boom bust or riding the market out?
To touch on something you said, if I don't mind, about time, the value of time, and you can't get that back. Time is so much, and I think the older you get, the more you realize how valuable time is, right? Time is so much more valuable. So when I think about this, sometimes I just want to say people don't, like, even when I am working with a client and we're looking at the illustration and you see the numbers on the page, and I'm constantly telling people that those numbers on the page are just the beginning. It's not even what it's really all about. This whole thing, you mentioned it when you said your access to capital. So let's just, I don't know how, I want to clarify this. You got your money in a 401k, you can't touch it or access it without, penalties or taxes, or it's in a stock market, you go to take it out and you're quote unquote guaranteeing your losses. If it's during a downtime or whatever, it stops growing, right? So you've taken it to go do something else with it perhaps. But when you have your money in this dividend paying whole life policy that we have designed specifically for the infinite banking concept, you have the value of time constantly, that uninterrupted compounding. But you also, because you have access to it, and because when you are putting it in a place that's locked up, you only can skim off the cream off the top of all the money that you're making, right? You've got to be able to put aside money that you can't touch. So that's already a lesser amount because it's being locked up on you. You're not thinking about, I can use this tomorrow. You're setting it aside for one day, someday. So, but in the meantime, when I have access to capital in my policy, I have this whole, 20, 30, 40 years ahead of me that I can be continually using that money in other things as well, right? I can be investing it in real estate. I can be taking over loans that would have gone to a bank and paying myself that interest that would have gone to the bank. I can do all kinds of different things with it on top of the fact that it's still growing. So I think there's just it's so mind blowing when you really realize how much, plus, because I have access to it, I can put more of my money into it because I know that I can access it. That's where this whole thing of control and time and access it just grows exponentially into the difference between the two concepts. Does that make sense? Am I getting at something there that I'm just like, when I look at that, in fact, I had a client recently say to me, when they looked at their annual review And she was like, okay, I've put in $30,000 over the past few years. It shows the annual, premium accumulating. She goes, but the activity shows that I have actively used $45,000. I was like, yes, you're seeing something there, aren't you? You've actually used $45,000 in use, even though you only put in 30,000. Why is that? Because you were able to use it, pay it back, use it, pay. You have the velocity of that, and you have the use and the control of that. Like, that's just something I think that we don't explore enough, maybe. I don't know. It's just a thought when you said
I
they,
think that's like you gotta experience it, right? Like
yes.
we could tell everybody how this works mechanically, and until you experience it, you can't really fully wrap your head around it.
Yes. And when she pointed that out, I was just kind of like, yeah, that's right. That's really cool, isn't it?
I love the different levels of connections that folks make when they're doing it, like Brandon is saying. When you see somebody go from beginning to, okay, I understand this enough to get started, and they get started and they are like, wow, I made my first policy loan. They actually sent me the money. Amazing. And then you go do something with it, and then you put it back and put extra back and pay more or just whatever. And then you have these subsequent ahas. It's like, what? This was the number I put in, but because of movement, because of access, and because of, moving peas on the shelf, as Nelson would put it in the book, but movement of money, velocity, like you said, Chris, there's so much velocity in actually banking. Yeah, not just statically seeing something grow like a policy would do on autopilot. It's going to grow death benefit, grow the cash value, but by our behavior and velocity of money. So I'll just say it one more time because I don't know if I said it well enough. I am really excited and a bit anxious. I actually am a bit anxious about maximizing that human life value because I see the potential for myself to reacquire more of the footprint that I'm eligible for, which is exciting. Then, of course, thinking about, so I'm saying these things for the folks that they love getting into the nuts and bolts of building a system and doing things at a high level. And then being able to get subsequent policies on our children, because if our human life values raise, we can get more coverage on them as well, which just means, a few more policies are added into. So I'm saying that to say that, Nelson had, dozens and dozens and dozens of policies. And then we know other people and folks that listen to this conversation probably have heard other people talk about having, many policies, several policies. It's not where you start, but again, that's where you can build up to. I'm both excited and anxious about doing that. So I mention it because I as well, Tricia, this past week had a client consultation call where this individual is paying significant premiums for them, have been implementing the concept for several years now, has 4 policies, okay, but still have enough space with their current system for their current banking purposes. So you alluded to this. No, you didn't allude to it. You described this earlier. You described, you might be doing enough with your whole life policies, but he was in this situation in our discussion where he also still had more human life value that he could go ahead and capture, even though he was doing plenty of banking, still had room. No need to necessarily consider a new whole life policy yet. But I definitely, tried to forecast, hey, if you want to go ahead and absorb more of this financial footprint that you're eligible for, this is what it would look like, and just paint what's available. That way people at least know what's available.
So my thought, as Tricia was talking about this uninterrupted compounding growth that you experience inside the policy. So let's say you used a policy loan to invest, even put money into an IRA. That's a retirement plan that you're going to not tap into later, but you had enough cash flow that you could do that, put it in there, invest in there as well, get some exposure to the stock market or mutual funds or whatever. And then, that's going to grow, and it's going to grow inside the policy. But then we come to where we came to, the past few weeks, and everything drops in that investment in your IRA. But you've still got the basis inside your policy that didn't dip, but it continues to grow and grow and grow, right? So I guess my point is, like, I've been into investments, and I'm sure we all have, where we've lost capital.
Mhm.
But if the original basis, had I fully understood what the power of infinite banking was before I made these investments in other assets that have lost value, the basis would have still been there and growing, even though I lost value over there. And so the sting wouldn't have been quite as bad,
Right.
as what if all my eggs were in that one basket, right? And how many times have we been told in life to diversify, right? This is another way to diversify. And it's another book that's out there, the and asset, right? It's not, we're saying you have to do this or you have to do that. Like, this gives you opportunity. It's infinite, right? We got to rethink our thinking, and it's very, very, very hard to do, right? Because we're taught how to feed the beast or how to be part of the system or whatever, right? This is such a freeing, different way of operating in so many different levels. And I think that's just another aspect of it.
Totally.
Yeah.
You're mitigating your loss, your risks, right? By doing that. Cause yeah, absolutely. I could go invest in, I know real estate. I'm happy to do real estate and feel like most of the time it's going to do wonderful, right? But in the event that it didn't, I didn't risk my money. I risked the life insurance company's money. So it can actually wind up, what's the worst thing that can happen? A little bit of it comes out of my death benefit at the end of the day, but it didn't hurt me in the process. So, or at least it certainly mitigated that risk. So I do love that.
Yeah, I don't want to spend not enough time talking about what's, for me, the core of infinite banking, which is accessing capital, growing it, scaling it, extracting that control of the use of it, right, Tom? I love talking about all these other things. Where was I going? I loved what y'all were saying, and I was trying to say, it's okay, give me time. Like Tricia said, I can edit this out. My nebulous thinking right here. I hit a cloud. Oh, what is it? I mean, that's just the meat and potatoes anyway, is that. We have all the advantages of the policies themselves, but the use of the capital, because I like real estate as well. And I like investing in, businesses or just things that I like to do, and everybody has their gifts and their talents where they should, deploy capital where they see fit. Here's where it was. But the financing, everything's financed. Careers, households, investments, businesses, lives are financed. Now, so people don't know that, all right? And that's what I think first and foremost, here's what I was trying to say. First and foremost, we're trying to make people aware that everything's financed and that they could control it, like Tom's been talking about, and they could profit over it, okay? Now, if from there, from that warehouse, from that family dynasty, that private banking system, you want to do the business and the stock market and the real estate and the et cetera, beautiful gold, Brandon mentioned gold, like we're just talking about all different kinds of things because people do all different kinds of things. Now, to that note, Brandon, how about this? And y'all have heard this, but this is for everybody else, if nothing else. But it's good to have it repeated, I feel like. When Nelson was asked about diversification, he said, Trisha's already laughing. He said, well, I am diversified. I'm diversified in lives insured, right? So what he meant by that was, again, we've already talked about having a system of policies. I mean, my goodness, everything we do in life is based off of our lives. So if that life is insured, that's great diversification if you spread that out over the people that you have insurable interests. My wife, my family members, my children, business partners. That's a great diversification right there.
The only thing I was going to add is that Nelson did experience that, right? He had a key person in his business at one point that he had put a policy on, was really just an acquaintance, later on lost touch. That gentleman passed away. He said that made up for a lot of mistakes in his life.
So no, so I'm glad. Thanks for adding that. Think about that. And this is a tactical thing to say that when you apply for a policy, you have to have an insurable interest in that person, in the insured person. Okay, if you're going to be the owner of the policy, you got to have an insurable interest in that person. Let's say it's a business partner at the time of application. But then, yeah, life happens. You know, if that partnership, you go different ways, it's just whatever. And there are lots of reasons to consider getting coverage on anybody that you have an insurable interest in. Diversification being one reason, right? But that part of it covering a lot of mistakes. I'm so grateful for over my past 10 years of the things that I've seen happen that I didn't control per se, meaning, you know, the profitability of the company and me earning dividends and cash values going up and my net worth going up because of the death benefit rising and stuff. But I've made mistakes along the way as well. I've learned some lessons over the past 10 years, y'all, even since starting this infinite banking journey. And that is a great reminder of that big picture thinking of, you know, we're going to make mistakes along the way, but if we're also proactively building something that we know at the end of the day, worst case scenario is I graduate earlier than I want to. That's going to take care of a lot of mistakes that I've made along the way. So I love that you brought that up.
Can I bring up a topic and love everyone's thoughts on it too, because, you know, this ties back to kind of what today looks like. I mean, you know, obviously there's a lot of question marks regardless of where you are in your life, whether you're kind of getting started in your careers or businesses, or on the flip side, you're in sort of the, you know, coming down off the mountain world of retirement and trying to extract the use of your assets, trying to understand where infinite banking and these specially designed policies fit, right? And how they support in times like this, right? Because you hear things like, okay, Buffett's got $300+ billion sitting in cash. He's supposedly the best investor in the world, right? You know, there's some value to having access to cash, right? And be able to store it somewhere safe and sound and earning something. But, you know, in times like this, having assets that are stable, predictable, and understood and contractually obligated is a powerful tool for a whole host of reasons. And I want to talk through that with you guys to kind of hear from your lens where you've seen that, because I think it gets underappreciated at times when things are hot, when markets are hot, real estate's hot, everything's going up. It can be underappreciated unless you understand how to use it, right, as the fuel to those investments. But when things are falling apart or uncertain, I think this is where these sorts of assets and sort of strategies really shine, right? They really make it pretty clear that they're powerful and why they fit into our lives. So I love to hear your guys' thoughts on kind of that topic.
I'll kick it off with a quote that I'm pretty sure I've remembered from Warren Buffett, which is, put all your eggs in one basket and watch it closely. So I'm pretty sure that's from Warren Buffett. So for me, first and foremost in my life, of course, is this private family banking system that I've built, that I've paid very close attention to for going on 10 years now, even though I know it's going to do what it's going to do because of the contractual nature of the type of assets that I've bought over the years, right, over these 10 years. But the utilization of that private banking system is my one basket there. I'm not saying that's because it's not an investment. Banking is a function. Banking's not an investment. But I have been watching this like a hawk, this private banking. And that's why I'm telling y'all, hey guys, I'm excited and I'm a little anxious because I actually see that I can expand my system this year. And I'm really excited about it. And that means cool things for me. But then how we use these assets for what's next, I think also we should watch like a hawk. I feel like we should also, you know, be very knowledgeable and experienced and have connections and gifts and et cetera in whatever it is that we're going to do. Tricia, she's got real estate, well, actually everybody on here we've talked about real. So I'm just picking that as one example, right? But y'all have a background in that. Y'all have experience in that. Y'all have knowledge in that. You have connections. Brandon, you were talking about you're speaking with this group and things of that nature. So you're knowledgeable in that area and experience. So that's my first thought. I was trying to get you that quote. What do y'all think about what Tom said?
I was just thinking about when he mentioned Warren Buffett going all to cash. I'd sure like to know where he's putting his cash, but anyhow, like what, but, I think they say, like, I know Robert Kiyosaki will say, most people make their money in a crash because the people who are wise about this do go to cash in a time like this, because then they're able, when things fall, to swoop in, and that's when they buy their deals, right? And it sounds awful, but it's the truth of how this works, right? But if you're not set up for that, but even if that's not, your wheelhouse and that's not what you're trying to do, but just being in that cash position, having that access to capital in a situation like this is what can rescue you from a job loss. I mean, we've got I'm in the Hampton Roads area of Virginia. And with everything that's going on with the executive orders and the government, freezing, there's all these hiring freezes with all of our government employees. We have the most, I think, in Virginia, government employees than any state in the country. So I'm in my area hearing it all the time, left and right. Even some of my children are, employed by the government. They're GS employees. And so they're like, we're either getting our positions frozen so that we can't take that job that they were looking at moving up to, or they're in fear of it being completely eliminated and losing their jobs. So in a situation like this, having access to capital, yeah, that can be a definite hedge of protection in a situation like that. And or it can be the opportunity to go and, purchase, I don't know, a falling, real estate piece of property that has fallen in its value or something. We haven't seen that yet, but I'm just saying those are both sides of that coin that can happen when you are in the position where you have access to capital during a time like this.
So on that, and Tom, you re-ask your question for us again so we get you fresh perspective, and Brandon weigh in on this. But I've had a conversation recently with a government employee as well, Tricia, and it's bothersome, right? Because of the fluctuation of things or the uncertainty of things. But in that, because we can't control that, but in that, there's also a great measure of peace, right? Because something's already been started by this individual where they have capital build up here, and they might not know what the career is going to look like over the next month, next year, and here's where I'd underscore that it's so important to have ongoing conversations with all of your professionals, but for folks that are implementing infinite banking, that we maintain that line of communication so we can share best practices, right? And let iron sharpen iron between us as we're helping clients navigate through that. But that access to capital and being able to say, well, okay, if this happens with my job, I've got capital here that I can either weather the storm while I pivot in my career, or, hey, maybe I'll do something completely different. Maybe I'll take that access to capital and I'm going to launch this business that I've been running part-time and I'm going to go full-time with it, or I'm going to snatch up this, investment opportunity because that's what I want to do. So just having options. Having options and having communication, that's the light, I guess, in that situation. But yeah, ask your question again fresh, Tom. I want to make sure that you're getting the feedback that you were looking for here, and then Brandon will definitely weigh in.
To me, it gets back to that kind of earlier part of our conversation, the practicality, like actually experiencing it. Because sometimes when things are kind of floating and doing well, you kind of almost can forget what's happening. You're on autopilot until crisis hits, until things change, which I say this to myself every morning. I embrace impermanence because I know today is likely going to be different than yesterday, and tomorrow will be different too. And I don't know when it's going to change for the worse or better. I don't, right? So for prepared people, right, they expect it to change, and we have to be prepared. And so I like to see when how people are dealing with it, how are they dealing with it? Because I see people who have limited options in the time of chaos because of the way they're structured in their lives. So I'm just curious how you see it with others, regardless of where they are in their life, beginning and their growth, or maybe even retirement, which we know people are scared to death now.
You know, I experienced a job loss during COVID, like 2021, right? And if I look back, I'm like, it's been 17, 18 years since I purchased term life insurance based on what we're told in, you know, in the large, advice, most people's advice is buy term and invest the rest, right? You hear that probably more than anything else. And it kind of ticked me off after I understood the power of what we're talking about, that 18 years ago when I was younger than I am now, that I didn't buy whole life insurance. And if I had bought whole life insurance, that job loss experience for me at that time, which was extremely stressful, would have been way less stressful, way less stressful. And even if I had the money sitting in a bank account, in a savings account that was right there for me to grab, and I needed to borrow that money or take that money out and spend it to pay for groceries or car insurance and gas or my mortgage, what happens to that money once I did that?
Gone forever.
Gone forever, right? But what happens if I did a policy loan to bridge the gap? It's not gone forever. It's still there growing. Is it like skyrocketing to the moon? No. It's the slow and steady wins the race. It's providing security. It's giving me control. I don't have to go fill out an application to get a policy loan. I just tell them I want it because it's already in the contract, right? And in a few days, it's in my bank account, right? Man, that would have really caused me to have a lot less stress than when I personally went through job loss, right?
Yeah, that's great. No, it's great because you know, to that point, recently coming across someone who has who had recent job loss, and the trickle effect of what that may mean, right? Loss of cash flow, loss of benefits, right? Uncertain future, market comes down, like, so a home that is stuck with equity that they can't access, right? So here's a situation where everything is great until it's not, right? Loss of job. Now what happens? Cash flow stops, and now they're draining any savings they had is basically being drained. The bulk of
Equity
their assets are
capital.
sitting in their home and a qualified plan that have their own issues,
Mhm.
right? All their assets are locked, right? Until they have to liquidate, right? With pain. Or
Mhm.
maybe in this case, like, she can't even get a home equity line of credit because she has no job, right? And
Yeah.
so it all was working great until the spigot shuts off, and now options are limited. And now you're in sort of scramble mode, right? And even though we know these things can happen, some people don't kind of run the drill to go through it, right? It's like, what's that, the fire alarm? Why do they do fire alarms at schools? So that you're prepared for what happens when the fire hits, right?
Mhm.
But most people are not prepared because everything's going okay, right? If they had an option for another resource somewhere that they could pull as needed without any questions asked, they're in a pretty powerful position, right?
Yeah.
But they didn't know they needed it, right? Everything's working until it's not. That's why the experience of it really shed some light on it, because now if they had access to it, you can control when to get the capital and when you can pay it back, and it isn't gone forever, right? They'll have the insurance that the company that didn't offer them, now they don't give it to her, right? No disability, no life insurance, everything's gone, right? So these are all things that unfortunately, are coming to pass to people who are maybe getting let go, and it's a shame, but hopefully it gives them a good lesson for the next time.
I like how James Nethery says, there's never a problem until there's a problem. And a specific one that I love that you brought up there, Tom, is with HELOCs. So one of my more popular videos that I've done so far on the channel is around misconceptions around HELOCs and infinite banking. But that point that you brought up about if someone has equity built up in their home and they have access to capital because of a HELOC, great. I personally think that having access to capital is great. Now, terms and conditions, they matter, right? That particular relationship is not as superior as having access to capital through policy loans. It's just not. But I love it if you have more access to capital. But what you said, I don't think that people think about enough. Until that problem's there, then they maybe can't do something about it, which was about, well, if you had equity built up in your home, lose a job, is it so easy to go get a HELOC? I don't think so. I don't think it's as easy, right? Because you got to prove your ability to, but like Brandon was talking about earlier, we're not asking anybody for anything when we take a policy loan. We're filling out a service form. We're logging in online or making a phone call and we're getting asked, well, how much of what do you have available do you want us to send to you? And do you want a check in the mail or, an electronic transfer right to your account? And that's it. So I love that you brought up that point about HELOCs. Awesome.
There's another point about HELOCs too that people have experienced in the real estate world, especially where they would take a HELOC, maybe do a fix and flip, and then just pay it back, right? Oh, okay, cool. It works, right? Until there's a recession and the banks say, you know what? I don't think I'm super comfortable anymore with this HELOC situation. We're going to freeze your HELOC. You no longer have access, right? And so what if you're in the middle of that project or you just acquired it and now you don't have the access to the funds to fix it, right? Or whatever else you're using that HELOC for. And then something that you thought you were depending on is completely gone, right? So again, it goes back to who's in control. You're not in control. The bank's in control.
They say the bank's always happy to give you a loan when you don't need it.
That's right.
I listened to an interesting conversation that you mentioned and asked it earlier, Brandon. Caleb Williams had the guy that's called the father of the 401k on. I thought it was terribly interesting. And he said something that caught my attention. So for me, knowing that a bank in that HELOC scenario, for example, can pull those levers, I'm not saying do it. I'm not saying don't do it, right? People, they're going to do what they want. I want them to do what they want. But I want as much control over my personal finances as possible. Okay? So I'm not saying don't play the game. Play the game if you want to play the game. But at the end of the day, when it counts, when there is a problem, when there is a recession, when there is a bust, you just figure out what's what. I actually think is that a Warren Buffett quote as well? Something about, when the tide's high, everybody looks good. When the tide's low, you see who has their pants down, or however that saying goes, right?
Naked, yeah.
Yeah.
Right.
See who's women naked.
It's instances like that you're describing, Brandon, where it becomes obvious, right? So why I mentioned what I did about that conversation with Caleb Williams and his guest that he had on his show, which I'm very grateful to be able to hear other people's perspectives. But something in his language where he was describing something just made me realize, okay, that's probably a philosophical difference that I have from him or somebody else, okay? Which is the idea that other people have better plans or better systems or better thoughts about what I should be able to do or could do, because like in that scenario that you were describing of, if I've got the connections, with these subcontractors or contractors or other professionals, and I've got the experience for this flip and, I've got this track record of I've done it this way and that way. And and I've been successful and this is my gift. This is my talent. This is what I know how to do. But then somebody else can pull that lever on me and pull that financing out from under me because they can, it doesn't matter if I have these skills or if I have these connections or if I have this experience. You know what I'm saying? So I love that you brought that up. I think that's important. Who do you want controlling the banking function in your life? Who do you want it to be? I want it to be me. I want it to be me. I don't know if I described well enough that conversation from Caleb and them, but just that, I had my money in the 401k before. I had, 6% was taken out of my income before. I never saw that money. When I was a sheriff's deputy here in North Carolina, when I was a high school Spanish teacher in North Carolina, I didn't get, the state thought they had a better plan for 6% of my income than I did. I feel differently about that now, knowing what I know, right? I wished I would have had that access. Like Brandon, things would have been different if I'd have had access to that and been able to deploy that differently, So I feel strongly about it. I still love your wording, Tom. Extracting control back. I love that language.
But I have come to realize that extraction and desire for that comes with the challenge. You got to own it then, right? This is, what's that say? Freedom is not free, right? And, when you get into that world, especially in the world we live in, running our own practices and businesses in life, right? There's other things that come along with that, right? I've lived a job before and I can understand why that's appealing and it served me for a while. But when you're on the other side of it, I'm like, wow, it's a different world. It comes with other things because now you do have to make more decisions. You have to do more things to control what happens. And that comes with responsibility. And, you have to be willing to take that on and earn that freedom, right? Because it doesn't come for free. And it's something that I always talk to folks about who are coming to me and saying, hey, I just hate my job. I hate this thing. I can't stand this manager. They are basically trapped. And I said, you got to claw your way out. It's fighting for that freedom, but it comes with owning it, right? And that's a challenge. And trust me, it took me a while to go through that myself. So I appreciate how hard that is. But, I really take it to heart these days because as I'm teaching my kids and they have a choice, they just have to choose it.
Yeah. Tom is speaking from a point of experience there, that transition he was talking about. So here is just my golden opportunity to encourage everybody. If you've not yet listened to everybody's background story here, we've had a one-on-one interview for Brandon, for Tom, for Tricia. Make sure to check that out. So if you got value from this video on how to live and leave a lasting legacy, I would love to know exactly what your biggest takeaway or biggest question was down in the comment section below. Live and leave a lasting legacy. Have a great day. Take care.